Hello, my name is Neil George, and I am live at the San Francisco Money Show, and joining me is Sean Worthington, author of Beyond Bitcoin. Sean, in our last segment, we were talking a bit more about your book, but one of the things that I also want to address is the coin marketplace. You had Bitcoin, one of the first to come in this space using blockchain technology, and then we've had a series of coins, Ethereum and a variety of others, and for a while we seem to have a new coin offering coming at us almost weekly. Yes. What has transpired in that market? Are we seeing a slowdown, or are we seeing a pause in the generation of new coins?
So we're seeing kind of like what happened after the dot-com bust in the 2000s, where everybody realized, hey, this is not just instant free money that everybody can just get rich on. You have to actually have some purpose. There's some fundamental values to these coins, and not every coin is going to be successful. So I think that we're seeing investors are much more cautious. We're seeing a lot of people went into the market, they got burned, and they've learned their lesson. And there was some people that were quite smart about it, understood what bubbles are, understood that we did have a bubble, and understood that it's going to crash. But I actually expected it to crash much worse than it did. I thought it would go below 3,000 Bitcoin.
Yeah, well, we have Bitcoin, we topped out in the 18,000 range, now I'm at 6,000, 7,000 and so forth. Again, that's still a precipitous, trouncing, if you will, compared to other financial assets.
But in a typical bubble, it's going to go well below what it should be worth. And so if it's bottoming out at 6,000, that's still a huge amount. I mean, that's really valuable. And so we still have a lot of future in cryptocurrencies.
One of the problems, of course, is that when you're looking at a currency, you really have two purposes. You have an exchange of value for commerce, and then you also have a store of value, as far as a currency and basically a measure for maintaining your wealth. One of the major arguments that works against that for the coins that are out there right now is that really isn't a medium of exchange. You have to pay somebody to actually process it for it. There's a bid and offer spread. There's a fee to buy, a fee to sell, and you can't just walk up to a newsstand and buy a copy of the Times, or to buy a hot dog at your local stand with a fraction of Bitcoin. And then consequently, as we mentioned a moment ago, with the volatility in the pricing, it really hasn't been a good store of value.
You're right. Yeah.
So what's going to transpire that's going to address medium of exchange and a store of value?
So the cryptocurrencies haven't been doing very well at that. There are some cryptocurrencies like BitShare that has solved some of those problems. Something like CloudCoin has solved those problems. But I think that if you want to buy BitShares, it's because you want to buy $1 million worth of oil in Venezuela, and you know that if you use dollars, they're going to tax the hell out of you trying to transfer it. And you want to get around all this red tape and barbed wire that international trade could put up there. But to try to buy Bitcoin as a long-term investment, I think that would be a very bad idea, because it is a first mover technology, and there's other technologies that are far superior to it.
So with that being in mind, it seems like there's a cautionary tale there that A, it's not really a good store of value. It can be a medium of exchange, but primarily as a workaround towards sanctions. That doesn't sound very much on the up and up.
So if you use Bitcoin, you can get rid of taxes, so there's a value. You can get rid of tariffs, there's a value. You can have confidential, hopefully confidential.
But you have that blockchain which has all of the transactions. So all it would take would be an audit of that coin's found. They'll see that you had transactions in Venezuela. You went around sanctions, or you had transactions in Moscow, or St. Petersburg, and you'd have the same problem, and therefore you're still in trouble.
So as long as you're not worried about the United States government where you live, if you're trying to get around the Venezuelan government, then there's probably not a problem with that. But you're right, if you're going to do something that's illegal in your own country, you've got to be very concerned about that, because they can actually use that data to prove that you did things in a court of law, so it is a problem.
So again, it's kind of like the public still hasn't come fully to grips with what actually these coins represent. You don't really have an anonymity, and the challenges of both the exchange and the store value is still being worked out.
Well, there's a lot of people that have come early that really do know the value. The libertarians, the people that bought it not as an investment, but as to do trade. And so it has been very valuable in that sense. The problem is that people started buying Bitcoin. They noticed it went up in value, so they started buying it more as an investment. Then you got people using their credit cards to buy it, mortgaging their homes, causing this big bubble. That's where the real problem happened.
So again, we're still in the infancy as far as that technology
Absolutely.
is concerned.
It's risky, but I think that it is the future. It's going to dominate, digital currencies in general.
Well, again, Sean, thank you very much for sharing your thoughts. Again, Sean Worthington, author of Beyond Bitcoin. I am Neil George, and we are live from the San Francisco Money Show. Thank you for watching.